Let's talk to Mike van Dulken. He is the head of research at Accendo Markets. Morning to you, Mike.
Good morning.
Right, three thoughts-provoking slides to run through. Let's kick off without further ado. Beazley PLC, the insurance company, a nice uptrend.
A nice strong uptrend. I think what I like most about this is it's a very obvious uptrend. You don't have to look very hard to find it. The tram lines are nice and easily drawable. Bit of a pullback over the last couple of months. I mean, that I think must be from the May highs of the market, of the FTSE in general. So there's strong potential here for support to kick in. It's not to say that the rising trend line will prove to be where it bounces. It could well pull back to those lows of late March. You know, you've got to give it a bit of breathing room.
Yep.
But I like the fact it's in that strong uptrend. It's done this thing before in terms of pulling off before bouncing. Good, strong. Insurance is a fairly stable industry, good yields, and healthy exposure to the US at a time when we're more concerned with our own woes vis-a-vis Europe, etc., and homegrown economic slowdown, etc. So again, we're not calling the bounce. We're saying there's a strong potential for it, and keep an eye on that 540, 550 zone for the beginnings of a turnaround.
Basically a key support area.
Indeed.
Okay, let's talk about legal and general. There was quite a bullish piece in one of the newspapers recently about having these in your portfolio. What are they doing technically?
So we've got a break above the early July highs, and we're testing the highs of late June, which was support turned resistance. So early June, that level was support. We broke below. It served as resistance in late June. We've got back above it, which is a good positive signal. I think we've broken the downtrend from early June as well, which is that trend line's missing there. So if you go from the peak there and above the mid-June highs, you've broken beyond that downtrend, which is another positive. So potential there for upside of 16, 17 pence, which doesn't sound huge, but in percentage terms, that's a nice healthy return. Back to the highs of late May, which go back, I think, almost 4 years actually.
Right.
Yeah. So it would be significant resistance to revisit. Whether it goes beyond that remains to be seen, but nice short-term potential trade there.
Understood. Let's wrap up with the last slide. Persimmon. What's your thoughts here?
Well, last time I spoke to you, we looked at Berkeley Group, which was showing something very similar, but ultimately it did break lower after disappointing results. Now, Persimmon's recent trading update was relatively positive. Sales are up, reservations were up, average prices were up. It was giving all the right sounds for a house builder. On the flip side, we do have a slowing UK housing market, but this doesn't seem to be doing any worse. And if yesterday's inflation figures were anything to go by, they were softer than expected, which may mean that even an August interest rate hike by the Bank of England is off the cards. That would remove a hurdle that people might have been holding off on buying houses for fear of higher
rising
borrowing
interest
costs.
rates. Okay, that's a good point.
Yeah, so if we might be looking more that we need to get above 25.50 before you start getting excited. But the fact it's spent so long bottoming out for me is a good sign, good signal in itself, and hasn't done any worse than the lows of late March. So I think get above 25.50, and that could be on for another run back towards 29.
Okay, just to wrap up in terms of the field position of the FTSE 100, generally, are you seeing lots of buying interest at these sort of levels?
I think there's demand for select names. It's certainly not across the board.
Right.
Several times over the last few weeks, when the FTSE has been looking like it's going gangbusters, you look at the makeup of the strength. It's lots of defensives. That's not to say we haven't had, stits and starts of interest in the banks and the miners, but on the whole, you look at the likes, Reckitt, Benckiser, Unilever, the pharmaceuticals guys. They tend to be the ones showing the most uptrends or rising momentum, which is not a sign of all-out risk appetite, which is perhaps to be it's understandable given that we don't really know. I mean, I know the FTSE is not UK PLC. We're still up in the air whether we get a UK rate hike. The US is still hiking. Trade wars remain an uncertainty. This morning we hear that perhaps the US and Chinese negotiated, the talks have stalled again. That could have been a potential way of avoiding more big tariffs. So there is plenty of uncertainty out there. That said, the market's holding up remarkably well. I mean, I think the FTSE today is pretty flat, about around 7670. But if we can get above those highs of the last couple of days, it could easily rally back towards the recent highs. While you look across the pond, and the Nasdaq keeps pushing on, the S&P still
Well,
high.
I've got to say, I've looked at those US charts and they all look pretty bullish to me
I
at
mean,
the moment.
it's pretty impressive. So, that does highlight the regional divergencies we're seeing. But as I said, there are pockets of strong momentum out there that are worth looking for. It is worth trawling the charts. That's what I do every day.
Yep.
That's how you spot the ideas. It's not just about looking at the FTSE itself.
Understood. Mike, on that note, thank you for your time.
Thank you.